Hello, my name is Margarete Biallas, and I'm very honored to be here at Sudan's Fintech Summit 2021 today. I would like to thank the organizers for inviting me to discuss IFC's approach to developing digital financial systems. My name is Margarete Biallas. I built IFC's digital financial services practice over the past decade. I am with the Financial Institutions Group, which supports financial services providers worldwide, and I'm based in Washington, D.C. Allow me to briefly introduce the IFC, the private sector arm of the World Bank. IFC provides investments and advisory service solutions to private sector companies in the real sector, infrastructure, oil, gas, and mining, as well as financial services. The latter accounts for roughly 50% of our balance sheet. IFC's main business is to provide capital to private sector players, ranging from equity to risk share facilities to debt and trade finance. This is complemented by our advisory services. We provide capacity building for clients to increase access to finance for women-owned businesses, MSMEs, and other financially excluded or underserved segments of the market. In doing so, IFC advises, for example, on business models, strategy development, risk management, and partnerships. Our objective is to expand financial inclusion, spur economic growth, and create employment by providing more access to financial services. A strong focus of our work in the digital space is leveraging technology, which includes microfinance institutions, banks, MNOs, and fintechs. We support the entire ecosystem and have had a strong engagement in the African continent, where we have expanded our access to finance with some 50 or so clients in over 43 projects. IFC did start its digital financial services work in Asia by supporting initially mainly mobile money solutions, and we have since delivered services to over 100 clients worldwide for some $130 million. This has enabled us, specifically in Africa, to provide access to finance for over 35 million users, facilitating over 35 billion transactions every month. We work with individual financial services providers, which include MFIs, banks, MNOs. As you can see from the slide, our projects range from support on strategy development, business planning, to a full digital transformation, which is work that we have, for instance, done with Cooperative Bank in Kenya. We also work at the market level with programs such as DigiLab, designed to accelerate digital transformation and building digital financial services around very specific ecosystems. The latter is what I would like to spend some time on today. The ecosystem I would like to focus on is really around agricultural value chains. If you would like to learn a little more about what IFC is doing in this space, about our research, our findings, and our handbooks, I invite you to visit our website, ifc.org/DFS, where we have, for example, published a handbook on how to digitize supply chains and how to apply technology to agri-finance. In recent years, IFC's engagement in agri-finance has been leveraging very specific value chains. Often IFC will have an investment with an off-taker, whether this may be a cockle in Cote d'Ivoire, an Ethio chicken in Ethiopia, or olam in Vietnam. We look at an agricultural chain and all of the participants from farm to fork, so to speak, and try and understand what their financial needs are, because access to financial services is critical for growth and increased productivity. We look at which segments of the value chain can also be monetized, and by monetized, I mean have a need for investment that then IFC, through its investment services, is able to provide for in partnership with financial institutions. Understanding the needs market size and opportunities in a specific value chain is a first step towards creating digital financial ecosystems. Typically, payments along the value chain flow in cash. This often results in delayed payments to farmers, leakages, and other inefficiencies. Payment transactions are also easier to digitize than other financial services, particularly because of the real-time nature of the transaction, which helps to increase confidence in a new instrument. Our approach is therefore to understand the payment transactions between valued participants as a basis for moving from cash to digital. So we look at how frequent are the transactions, what are the different transaction sizes, what are specific pain points for each of the participants in conducting a transaction. IFC has the potential to then support the development of ecosystems on many different levels. When looking at the customer journey of a farmer, from production to receiving a loan to repaying the loan, the below diagram illustrates IFC's ability to provide solutions to a multitude of challenges, whether related to financial, physical infrastructure or soft skills. This journey also illustrates how technology can be leveraged to increase access to finance for a farmer. Digitization of a payment stream is just a first step because this will provide critical information on the farmer's financial strengths and can be used to build an alternative credit score. Complemented with data from an off-taker or a supplier to the farmer will give additional data sources that can again feed into a score and make it more reliable. The overall information available can ultimately de-risk the lending process for a financial institution. And what of course is done for the farmer can be applied to each participant in the value chain. In developing ecosystems, as we call them, partnerships are key. A partnership between an off-taker and a financial institution can, for instance, provide additional sources of data, such as past sales, historic productivity of a farm, inputs, and so on. Partnerships between financial service providers and a fintech may enhance data analytical capacity and spur innovation. They also allow each partner to concentrate on what they are best at, hence contributing towards reduced costs to serve. With a view to enable lending, different partnership models exist. A partnership between an off-taker, a financial institution, can, for instance, provide additional sources of data, such as past sales. Different partners take on different roles in the partnership by providing, for instance, access points, wallets, data processing solutions, and so on. In the example of a partnership between a bank, a mobile network operator, and a fintech, for instance, the bank will take the credit risk, the loan portfolio on its balance sheet, while the MNO not only provides the data, but also facilitates payments, collections, and access points for cash in, cash out. The fintech in this partnership will provide the data analytical solution tools, which the bank uses for its credit decisioning and the final lending process. A critical factor in building successful partnerships is ensuring, of course, that each partner sees commercial value. Building a business case for all participants is an area IFC supports, because in these transactions, we function like an honest broker since we are not part of any one of the potential partners' businesses. Of course, like in everything else, there are also challenges. The first step in building ecosystem for value chains, again, lies in the payment streams and understanding how these work. And that is the first step where we often find that there are a number of challenges which need to be overcome. And this is where auxiliary services such as data information platforms or electronic KYC services come in and can help overcome some of the hurdles and obstacles that we find. Similarly, data analytics is critical to the development of loan products and at the products, frankly, because we need to know so much more about the customer to make sure it's a product that really suits their needs. And IFC has supported a number of partners in the development of scorecards, identifying data sets that are relevant. And we do so by employing an innovative methodology in collecting data and pairing this with our expertise in risk management and credit risk. I would like to present an example where I kind of explain a little bit of what we've done. For the cocoa value chain in Côte d'Ivoire, the IFC supported Cargo to deliver its promise to improve the lives of cocoa farmers and their communities while ensuring a long-term supply of cocoa to the business. IFC engaged with a number of players, which included MTN, Yap, the mobile wallet solution of SocGen, and Bachi, to develop sustainable partnerships between these different actors. IFC supported the development of concrete action plans, the design of a digital payments pilot, scaling this to reach 66,000 farmers, and then off the back of that, develop savings and loan products targeted at the needs of smallholder farmers. In parallel, IFC supported the risk management of the financial services providers, mainly through leveraging data analytics. And we partnered with our real sector colleagues to provide support to the farmers to improve their production capabilities, while concurrently engaging with the regulator to improve the policy framework. So a very holistic and rounded approach to the ecosystem by looking at all the different players and participants and making sure each positively reinforces the other. Cargo has developed 3 different partnership models to make payments for the cocoa they procure. In the first model, Cargo makes a bulk payment to its cooperative bank, Advance. Advance processes these payments to the individual farmer's bank account in batches. Bank accounts are also held at Advance. Advance bank accounts are linked to a mobile wallet, which is provided by MTN, allowing for ease of access to funds even in remote areas through MTN's agent network. The second model relies on check payments by Cargo directly to the cooperatives. Each cooperative pays the funds into the farmers' mobile wallets through a bulk payment process run by MTN. The third model is a partnership with a bank which has its own mobile wallet solution. After receiving the payment from Cargo, the funds are processed by SocGen and the bulk payment flows into the Yap mobile wallets of the farmers. Most transactions are free for the farmers. The only fee incurred is for the transfer from the bank account to the mobile wallet, as well as for cashing out. The cash out fees are used to compensate the agents. I would like to thank you for your attention. Please feel free to reach out to me if you have questions, suggestions, would like to have more information. You can find details of our publications and our work on ifc.org/DFS. Thank you so much.